What's going on, guys? It's GBP baby. Welcome back to another video. Hope everybody's doing well, and hopefully you've watched yesterday's video because we've had an absolutely gorgeous day today. If you haven't watched yesterday's video, I do highly suggest you go check it out, just because you'll see how we managed to pretty much call the markets in terms of, you know, delivery and the kind of expansion we got and the response we got from the levels which I was talking about yesterday. But nonetheless, we're going to dive straight into things. We're going to start on the dollar, and I did manage to copy over some of the trades I'd done at the same time into the paper trading on TradingView. So as we go into GBP and euro, you'll be able to see whereabouts I was taking the trades. But nonetheless, you can see how today we traded higher, running back into that daily bearish order block which I spoke about at the very beginning of the week. Volume still continues to respect it as it did on Monday and Tuesday. We tapped right in, trading into the 50% level off the previous day's wick, so yesterday's wick, and also into this consolidation, which I believe is from the 4 hour. And then you can see we had a large expansion to the downside and running out that Sunday opening price. So we're going to drop down to the 4 hour, take a closer look, and you'll see that consolidation we're in for a while. And again, in yesterday's video I was talking about this range specifically. I spoke about this on Monday as well, and how price is using it to gyrate around. So you can see our price traded on the downside, upside, and then eventually downside closing below it. So since then, price has been treating it as a bearish range and just respecting the bearish order block. But generally speaking, you can see, yes, we're wicking into it 1, 2, 3, 4, 5, 6, 7, 8 times we've tapped into it. But what I've been drawing your attention to is the way that we're respecting the daily bearish order block, and look at how volume is treating it. So based off that, you can see price continued to respect it, and I did as we expected, as in not running out the 50% level. And then we had a large expansion to the downside, running out our original south side targets, which I spoke about, and then we even managed to tap down towards these lows as well. I haven't quite run out this south side liquidity just yet, and you can see we're still kind of responding to that high impact news event we had about the tariff plan, which was, you know, we haven't had this was, I think, what's it called, like a black swan event, whereby it's not been planned in. We wouldn't have been able to see this news event planned in the calendar like from months ago. So the fact that we had this is like a recipe for large expansion. So we should expect a lot of volatility when we have black swan events like these. Then again, I wouldn't even call it black swan. I think black swan events is like, you know, when bombs are dropping and stuff. But my point is, we didn't know this was going to happen until obviously Mr. Man came into office. So things like this, they're high impact, and you can see how price responded to that. This is the Sunday opening price. Beautiful delivery to the downside. Again, yesterday I was talking about how price will use the Sunday opening price as a drawn liquidity. We targeted it. Look at how we tapped into it on the back of that. Tapped into it and then ran this house stops again, trading down into this bullish order block right here. And then we've just bounced off it now. So yeah, very interesting day. I do think we need to be very careful moving into Thursday. Remember, it is non-farm payroll week. So to be honest, all our trading should be done by this afternoon anyway, as in we shouldn't be running into Thursday with any kind of expectation, because we know that all the high impact news is happening on Friday with non-farm payroll, and non-farm payroll isn't something I really suggest trading, and I'll talk more on this tomorrow. But my point is, when we have non-farm payroll weeks, basically all your trading should be done by Wednesday afternoon, just because of the volatility and the risk. Now, it is tradeable, it's just I wouldn't suggest it. Now, what's interesting to talk about as well is this fair value gap on the 4 hour. You can see our price traded right up to the 75% level, very interesting, and then came off. And now I can imagine we're going to remain quite a bit of consolidation as we move into that Thursday, which is another reason I don't really want to mess about with it too much. But we do have a consolidation right here. I do like the fact that we've left it so aggressively. As far as I'm concerned, price should be able to continue to trade on lower. We do have a breaker, high, low, higher, high, and if we look at this range from this high to this low, if we look at this as what we call time dilation, let me type that for you. And basically what it is that price the time it took for price to get from here down to here, they could have done that in 1 day, right? Or they could have done that in a couple of days, but they decided to take about 3 to 4 days to get from here down to here. So if we ignored the time it took, if we ignore the time dilation and just imagine it was a drop lower, then this would be the breaker, because it's the last down close candle for the up move. From then we've only traded lower. So what we can do is we can treat it as a breaker, because it should technically act as one. So I'm going to clear up a few things. I don't really need to refer to this consolidation anymore. Don't really want to refer to that anymore. Don't really want to refer to that. This is a weekly inversion fair value gap, which we expect to act bearishly anyway. So I'm not going to do anything on that. What level is this? Black line. Bear with me, guys. I'm not 100% sure what that is, so let's get rid of it. But my point is, we want to look. I'm now looking at this last down close candle. So what I'm going to do is I'm going to drag it out. I'm going to draw the range out. Oh, I'm going to get rid of this as well. This is inversion fair value gap. Why? Delivery on downside, up, down. I just wanted the reason I drew this out. If you've been watching me this week, you'll know I was talking about how fairly traded this range is, as in downside, upside, left. When we've traded through something like this with this much consolidation, like back and forth price action, this is basically what's happening. When we've traded through something this many times, and I'm just doing a random amount here, but when we've done that, for price to get back through it, it's going to take a lot. It's going to take a full-on reversal. So this should act as resistance. This should act as like a what do we call it? Like a buffer. Like price shouldn't be able to get through that unless we have a full-on reversal and price is bullish and hunting for buy stops. And by the looks of things, we shouldn't be looking for buy stops for now. So that's just something to consider. But anyway, back to what I was saying. The breaker right here, we'll drag this out. We'll make this black. Should be able to continue to act as such. So let's just make this more clear. I'm going to make this blue. I'm going to call this a 4-hour breaker. I hope you guys are all following along. If you have any questions about it, do not hesitate to message in the Discord. I will see it. And yeah, the highest I'd want to see price trade is going to be 50% of this, because if we are bearish, price should be able to respect that, and you can see how it's done it here. But again, tomorrow there's still, with all the volatility and everything, there's still potential for us to wander up within this range, and if it does so, I'd expect it to find resistance still. But this is a breaker, as in we shouldn't be able to trade above it, and we should be able to use it as a point of selling. Like, we should be able to sell into it. So let's go to the 1 hour. There's that large expansion to the downside, and then that was the high impact news event we had. This level right here is the Sunday opening price. We'll thicken that up, and you can see our price is tapped into it here, and left it again. And then yeah, moving into tomorrow, I'd like to think that we'd continue to see this behavior. So what's definitely caught my eye is this fair value gap right here between this low and this high. Yes, we've wicked through it, but this is still a fair value gap. And if we are bearish, then this fair value gap should be a bearish fair value gap, as in drink every time I say fair value gap, but as in we shouldn't see price be able to trade back through it. So if we do find ourselves retracing up here, and don't get me wrong, we might not even touch around up here, but if we do, this will be the highest I'd want to see price trade for me to remain, confident in my bearish bias. But you can see price is still responding to the high impact news. It is still quite early, so we just have to wait and see. But generally speaking, I'm looking at these relatively equal lows as my draw on liquidity still. Whether we deliver there tomorrow or we're going to wait for non-farm payroll, I don't know, but it's going to be interesting to see. And nonetheless, you can see we also have a bit of a breaker going on here as we're trading through here, and then we have this bearish order block, so we might want to pay attention to this level as well. So there's a few things to take note of, but other than that, really enjoyed today, and I'll be paying attention to this bearish order block specifically as we move into tomorrow, to act as resistance, to then continue to the downside with the expectation to run sell stops. So yeah, that's going to be everything on GBP. That's going to be everything on dollar. Let's head on to GBP USD, and I'll show you the positions. So GBP done as we anticipated. I drew out this 50% level. Look at how price did that. Wait, let me just make sure I know what I'm talking about. I don't want to. So I spoke about, is that 20? Right, I spoke about the 25% level of this wick, right, in yesterday's video. If you haven't watched it, just go watch it. You might as well. But look at how price came down and traded right down into that 25% level here, and then from then on, price expanded right to the buy side and then hit our buy side target. Absolutely gorgeous. But you can't make this up. Look at how price is respecting that 25% level. You can't make that up. And I did explain everything yesterday. Remember, we looked at divergence. We saw that GBP was making lower lows. We saw that euro was making lower lows, but dollar failed to make higher highs, so we had a reversal. And I should probably make a video on divergence explaining that, because that's what gave us the confidence to then go long. Even though we saw price drop early hours, we were still confident to go long because we knew there was divergence indicating to it. And this, yeah, it's probably like a pretty solid setup. It's rare you find setups like that. Go long, and then we have a draw on liquidity up here with the expectation to be trading up into this fair value gap, because remember, we have a high time frame bias of wanting to see price trade higher. So if you've been following me along this week, you know everything I'm talking about. If not, good luck, but the videos are there. We can also look at this breaker. Look at how price consolidates at the breaker. This is why breakers are important. So we got a low, we got a high, we got a lower low, and if we draw out the last up close candle, Look at the volume, look at how price taps, look at this, look at the way that price is finding support on this breaker. This is beautiful price action, and I'm making a big deal of how beautiful this price action is, because it's rare to see it in Forex where the price action is this beautiful. Look at this, respect, came down into it once, ran. Yes, we're wicking through it, but look at the volume, and then look at the time at what we're expanding as well. Classic. I bet you we see price drop from 7 a.m. 7, where is it? 7 o'clock here. Yeah, we rally, and then the setup forms at 10:15 a.m. and then we have the expansion. Typically we have an expansion at 8 a.m. Let's see what happened at 8. There should be a setup forming at 8. Between 8 and 8:30 there's usually a setup. 8 we get the reversal, we get the pull back into the bullish order block, but nonetheless it's a breaker. We had this large expansion in the morning, and after I saw the way we expanded like that, this quick run here into the buy stops, that's indicative to me that, okay, we're bullish, price wants to go higher. Where does it want to go? We already had a buy stop set up here as a target, and then voila, you can see as we move on into the day and into the high impact news, price eventually wandered up into there, but obviously the back of the high impact news helps that, and again, that was something we couldn't really prepare for, so to speak, but it's just nice to see delivery like that. But obviously let's continue with our expectation for tomorrow. Ideally we do trade up into this fair value gap. I've been speaking about this fair value gap for a while now, so it'd be nice to see a price can wander on into that. I don't think it'll do it smoothly. Again, I don't even think I'm going to be trading tomorrow, just because I'm on farm payroll week. I'm happy with my trade this week, like we're good, but my point is, if dollar's going to continue lower, which we want to see, then I would like to think that we can wander on higher. Yeah, pretty much. But let's see if there's any PD arrays we can use. Again, look at this. So we traded up, down, and then we're trading back above. As soon as we run this high and this high, if we manage to take out those, I'll be comfortable to mark out this as a bullish order block, drag that through, and it should then act as support. As in, we shouldn't see us drop below the 50% level, and that should give us confidence to go along with the expectations to start filling in that premium fair value gap. So you see how it starts off with PD arrays down here, and then we look to PD array here, and now we're looking at a PD array up here, because we're tracking price, we're following it to its higher time frame target. And if it say fails and we drop below this and it starts trading, so be it. Where would we then look for price to go to? The previous PD array right here. So we look at these lows, and then I'd look at this low, and then we look at these. So do you get it? It's just a matter of knowing what your PD arrays are, having them marked out, and following them along. But yeah, this is definitely going to be a week for me I should definitely try and back test this. So I will see if I can do a live stream. I always say this. I will see if I can do a live stream. If you want me to do a live stream, do drop a like, drop a comment, join the Discord, let me know, keep reminding me. I will do it if you bug me, guys. We're going to finish up on Euro, and similarly, you can see beautiful setup, price drop down, fair value gap, creates this low, and then beautiful expansion, and then price had already hit our buy side target but before the craziness that happened. You can see I got out of it a bit late just because I was busy today, but my point is we ran straight for that level. Here's the divergence I was speaking about in yesterday's video. You should definitely watch it if you haven't yet. And then here's the Sunday opening price I was talking about as well. Look at how price stops at it. Don't you find it fascinating? Look, we come to the buy side, slight retracement, and then we push through it. High impact news, yes, we came below it, but look what happened as soon as we came back below it. Price left it again, so we're back above that Sunday opening price. We're running above this, so this is now a bullish order block technically. So I'm going to be looking at this moving into the new day. I'm going to be looking at this as a bullish order block, and then more specifically, we can look at the 50% level, because that would be the lowest I'd want to see price trade. Now, I would be a bit concerned if it did manage to come all the way to the 50% level. Obviously, the 25% level is better. I spoke about that this week as well. So I'm going to mark out 25% level as well, because we might find that price finds support here and then uses that to expand. But overall, I am looking for price ideally run the stops above here, but that might be quite ambitious, especially after that, again, high impact news. After that event, so we just gotta wait and see. And obviously, when price does things like this, it does it to confuse you. Look, it's taken out both sides of the market, ran out these beautiful sell stops, ran out buy stops, but we still have a higher time frame bullish bias. But one thing to take note of, and I've just seen this, is look at how smooth these lows are. Very smooth sell side liquidity residing below there. So there's, price may want to go and attack that, and that would mean that dollar would have to trade on higher, which is not impossible, because there's beautiful relative equal highs above here as well. So this is what I mean. This is why I'm probably going to wait. I don't really want to be involved. Like, both sides of the market can be traded to. Now, don't get me wrong, both sides of the market can be traded to anytime. You know, that's what makes it hard, right? But my point is, this is significant because at this point, like looking at price like that, you don't want to be messing about with that. This would be, if I was to say that price is going here, price is going here, I'd be literally guessing. It's dependent on how it's treating the PDA range, which I've delineated, such as here, and again over on euro again, such as how we're treating these levels. If we drop through them, whole different story. But if we find support on them, again, whole different story, and we need to be continuous and consistent. So that's going to be everything, guys. I do hope you found that insightful. Don't forget to drop a like, drop a comment, smash subscribe, join the mailing list, turn on post notifications, join me over on Discord if you found this insightful. And yeah, I'll probably catch you in tomorrow's video. Peace.